All right, good morning. June 7th. Um, this week, I want to watch a video and a half, and before we get into the chart work, I kind of want to stand on this structure piece for a little bit, um, and talk about trade setup and a conversation that I have with people, and the importance of sticking with your analysis. And this group is full of traders, and all of us are are still learning, right? We're getting better as we go. Some of us have more success than others, but at the end of the day, all we're trying to do is get to the next level. So, uh, 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 um, I had a conversation with a European trader. I think an English trader, CFX Mo. We're kind of split. I think he's long on GU and I'm short on GU. Um, and I know he's a competent trader. Um, but I always like to present my case, based on what I see, not emotional, it's kind of just what I see on the chart and what I kind of understand uh, as a trader and trading these ICT concepts, right? All of us will get it wrong at some point, right? We're always going to look at the market. We're going to make our judgment of what we think the market is going to do. Sometimes it's going to be correct, and other times it's going to be wrong. So, what I wanted to do is look at market structure. All right, in the beginner um, group, I was going to drop this video, but then I think it's funny that Kim had already dropped this same video. Um, and I think the takeaway from that is um, we all should still be scouring the net for resources, right? And this is a 7 minute and 30-second video, I believe, that's pretty darn good, with the basics of structure. So I'm going to play the video. We'll talk about it if we need to.
And this is what they look like. The idea is we buy through uptrends, sell market structure, one of the most important aspects of price action trading. And while it seems simple, most people get it wrong. So buckle up, because in the next 10 to 15 minutes, you're going to know everything you need to know to become a master of market structure. And stick around to the end, because there's something waiting for you there that will take your learning to the next level. So what is market structure? It's just the way the market moves. Uptrends, consolidation, and downtrends. These are the three phases of market structure, and this is what they look like. The idea is we buy through uptrends, sell through downtrends, and stay out during consolidation. During a trending move, not consolidation moves, we get two phases, impulses and corrections. Impulse moves are pro-trend moves, and corrections are pullback moves. Why does this happen? Because the market is an auction. In an uptrend, for example, there will be points where buyers want to buy, but they're not happy paying the current price to actually buy that contract or asset. So buying slows in the short term, easing the market until it reaches a price that people are happy to pay. When a good buying price is met, people buy and the next impulse starts again. Quite simple, right? So why is it so hard to understand, and what makes it difficult? Well, the first place people go wrong is in reading highs and lows incorrectly. To read structure, we look at higher highs, higher lows, lower highs, and lower lows. But because markets move across different time frames, sometimes we can get caught up looking at the wrong lows and the wrong highs. To avoid this, we want to view structure as waves. So instead of looking at every small up and down move, we want to look at structure in big phases, like this. This keeps you in tune with the overall trend direction instead of getting you lost in every small push. And this leads me on to the second point, substructure versus swing structure. The waves we just drew out are swing structure, and the small moves that happen within are substructure. It is possible to take advantage of these smaller substructure moves, as they are valid trends inside of the larger trend itself. We're going to talk about this very soon. So let's have a go at mapping structure. For this example, we're going to GBP AUD on the 1 hour time frame. Now we can see we had a trend shift here, shifting us into an uptrend. Now we're going to map the swing structure. So in terms of the swing structure, we are seeing multiple breaks of structure, which are taking us to the upside. And we can also clearly see the market is making higher lows along the way. So this is clearly an uptrend. It's not a downtrend. Now, how exactly do we mark the swing structure? Are we going to consider every tiny little nuance in the trend? No, we are not. We are going to move with the bigger picture and view this as waves. So there we have wave 1. That's the impulse. Wave 2, that's a correction. Wave 3 is the next impulse. Wave 4 is the correction. Wave 5 is another impulse. Wave 6 is a correction. And then wave 7 would lead us all the way up towards this point just here. Because this really is not too much of a viable break of structure, being just a wick, and this would actually signify the larger wave. So you've seen there how we mark out structure as a wave, instead of actually trying to look at every single little move. Now, sometimes when I'm teaching someone, they come to me, and when they're in their early days, they're actually looking at every single little movement like this and considering this as the larger trend direction. And then getting confused because they're like, well, the market's changing direction every few seconds. How am I supposed to keep up with this? Well, in reality, we're not. We just want to move with the big picture. We don't need to worry about little candle movements like this and the intricacies of each small move. What we need to do is focus on that big picture. Remember earlier, I mentioned the concept of substructure, the smaller trends inside of the larger trend. Well, we can actually trade these as their very own trends. So breaking down structure even further in this example, we can start to look for the smaller opportunities inside of the bigger move. So now working with the same piece of structure that we just looked at in that structure mapping example, we are going to look at the substructure and swing structure of the market. So let's mark on the swing structure. And now let's mark the substructure. The swing structure is the impulse moves and the substructure is the correction moves, the pullbacks. Okay, so as you can see, although the larger trend is bullish, we do see smaller bearish opportunities happening within. We can see that we have a valid downtrend actually happening inside of the correction. This is where we can take advantage of the substructure to take trades that are counter to the higher time frame swing trend, but entirely valid using a lower time frame. So for example, here inside the hourly, we could drop to the 15-minute and look for 15-minute bearish opportunities throughout this structure. So for the sake of example, I'm going to dig into this movement here and show you where the substructure opportunity came in. Okay, so using this piece of price action, we can see we have the impulsive movement. This was the larger hourly move. And now we are looking for a corrective move. Now, of course, we do not want to execute upon any trades until the market sentiment has shifted. So being on the 15-minute, we would want to see a 15-minute break in structure, which would come at this level. Now, if we get that, all good, we can go for a substructure move. If we don't get that, that's fine. We will just be continuing with the higher time frame swing structure. Now, as you can see, we've just broken the trend here by forming a lower low with a body closure. So what we could do now is look for opportunities to sell through this valid 15-minute trend. So why are we doing this if we know that the high time frame is bullish? Well, the reason for that is simply because we have a valid lower time frame trend. So this actually comes back to the fractal nature of the market. Now, the market moves in a way where the same patterns are repeated across multiple time frames, and this is a great example of that. We can actually see a valid hourly trend, but we can also go and see a valid 15-minute trend, both of which may provide valid trades. Now, when you're taking a trade like this, because we're moving against the higher time frame, even though we're moving in a valid 15-minute trend here, we do want to make sure we are employing a break-even strategy or trailing stops or doing something that will save us when the market doesn't reach our targets. Because obviously, if the high time frame trend is bullish, the high time frame trend has more weight, that means that we're not always going to get our targets filled, therefore meaning sometimes our trades may reverse after moving in profit. So we need to make sure we're protected from that, and in an ideal world, locking something in as well through trailing stops. So as you can see, this trade has now played out, and we would have actually added here 3.5R that we wouldn't have seen if we weren't using this substructure swing structure methodology. Now, you could obviously refine this to your strategy or execute the trade however you want. The concept I'm trying to show you today is just the trend. So you can see that both the bigger swing structure and the smaller substructure can provide opportunities for trades. The hard part is differentiating what is swing structure and what is substructure. And the best way to do that is by looking at the market as waves. The next rule you should consider is how far you should look to take your substructure trades before taking profit. You shouldn't try to extend substructure moves past the highs or lows of the swing structure moves. So if we're in a swing uptrend and we are taking a substructure sell, we should look to take profits at or before the demand zone at the bottom of the swing structure move. This way we know if the market continues to move in the uptrending fashion, we are out of our sell move before we get destroyed. This way, we capitalize on the whole pullback or correction, but we don't try to take the market too far, and instead we keep moving with the larger swing trend. If you enjoyed that, hit the link in the description. That's going to take you to my free course where you can learn more about market structure, supply and demand, liquidity, macroeconomic.
All right. Hey, man, I don't see Kim in here, man. I wanted Kim. But I think that's a great video. And I just think it's weird or funny that Kim posted it because y'all know, if y'all been in this group for long enough, Kim used to go back and forth with me for taking those substructure or counter trend trades. And that's exactly what we do when we look for the weekly order blocks. We generally trade it back to the zone. So that's a pretty good video on market structure. What it does not go into is the knowing when to pull the trigger or knowing when the market is shifting, right? And he briefly talked about it on that 15-minute chart, but there are a lot of folks that I think have trouble seeing that on that 15-minute chart. So what I want to do is kind of go back. All right, let me see, share. Okay, I went through this exercise this morning with my boo, because I think it's important that you kind of go through this for yourself to kind of understand if you see the same thing. So it's easy when you get the market structure videos because they're all perfect, right? But when you try to do this yourself and you're starting at this low and the market comes here or the market comes here, the next pullback is this low. Then you can't mark the next high until we break this one. So maybe this is the next high. Then you get this pullback. It's a double bottom right here. Then you get the next high. So this would be what this 4-hour structure would be for me, right? And it might be a little bit different for everybody. The important piece here is to understand that we are in an uptrend, right? This was a swing low. Here's your swing high. This is a swing low. Here's your swing high. This is a swing low. This is a swing high. And the reason why these are swing lows is because they create new highs, right? So we're still in an uptrend on this 4-hour chart until a 4-hour swing low is violated. Now, if you're looking at this small substructure, maybe on the 1-hour or on the 15-minute, we can clearly see this was a high, this was a swing low, and then we broke that high. So once this level gets broken, maybe on the 1-hour, that's when you have a change of character. And then you're waiting for price to buy back up to sell down to this level. But you can't try to sell it past this swing low. This is the problem that a lot of traders get caught up with, right? So they try to take this sell and say that it's a sell when it's really just a pullback on a lower time frame, but the 4-hour is still bullish. Does everybody understand it? There is nothing wrong with taking a trade that's counter trend if you understand what to look for. If you know that this is a bullish order block, right? This pullback, this is the red candle, and this is a green candle. That's a bullish order block on a higher time frame. The market just pulled back, the market went higher. Now you're expecting a sell into the imbalance of this bullish order block. So on a lower time frame, maybe the 15-minute, you can get in for a sell. And if you understand that you're selling it down 100 pips to this imbalance, it's a great trade, sir. But if you're trying to take this sell and sell it past this 4-hour swing low, then you're going to get wrecked. And that is that is the problem with many people who trade in this group and in many other groups, right? Because we get stuck on a specific time frame and we never look up. All we do is look at the structure, or we look at the trades on this time frame, and we don't understand that, hey, we're going to have a pullback on a higher time frame that might violate this. But on the daily, it might not be a change of it might not be a market structure shift. It might just be a pullback. And the pullback on the daily is going to violate the structure on the 4-hour maybe. So in order to avoid that, we always have to be cognizant of the higher time frame. This is why I try to go look at the latest and biggest candle that's closed, right? Hey Kai, you said where is this video posted? It's in the beginners it's in the beginners group. But let's look at this on the 2-month, right? This is very important. On this 2-month chart, right? If I fib this 2-month bullish order block, this green candle, right? You got this wick, and you got this green candle, which is a bullish order block. And I get my golden zone, and I get my my 78. What am I looking for here, guys? What am I looking for? I'm looking for price to sell back into my zone and go higher, or sell back into my zone, reject, and go lower. Is everybody tracking?
Yep.
Okay. If you're looking for a sell, this is back to the basics. Let's talk a little AMD, a little accumulation, manipulation, and distribution. If you're looking for a sell, what do you want to see? You want to see price go higher, right? Take out this high and then distribute down lower. Is that correct?
Yes.
Is everybody
Yes.
tracking? These are the very basics of trading. And I get it. We don't talk about this probably enough. But if you're understanding whether this is the 2-minute chart, this happens to be the 2-month chart, but 2 minutes, 5 minutes, 15 minutes, you don't always get it. But what you want to see is price take out the high if it's going lower. Or if it's going higher, you want to see price come down, take out the low before it goes higher. And if you just go and you look at these candles, many times you're going to see this is a bullish candle, price goes higher, takes out that high, trades down lower, right? Market opens up, goes lower, takes out this low, trades higher, closes here. So in a ideal trading situation, right, you're going to get price to go above an old high, manipulate you. It's going to fake you into buying it, and then it's going to rug pull you to sell lower. And in my opinion, I had a conversation with CFXMO or FXMO, who's a European trader. He's a very good trader. He's been buying GU. And I am under the impression that the dollar is going to buy, which is going to send these lower. It's going to be debatable, right? It's not clear right now because It's early. We're early in the move, right? If you look and you see, only thing that's happened is we took it out this high and we got a wick on the green candle. It's still green. It's not red. It's argumentative on whether or not we're buying or selling. But you have to make your own determination. If you don't see it, you can't get into the trade, right? I might see it faster or be in the trade faster than Newhoff or than Kim or whatever. But I could also be wrong, right? This could be a pullback to go higher. So every one of us as traders are charged with making decisions on a daily basis or on a trade by trade basis, right? I'm only bringing this up because it's a great example of how this really works and what really happens in these market streets. And what we have right here is a group of people who are traders, right? And we want to get better. So what I wanted to do, and you know what I did here with my boo, is I presented my case, right? Hey, look, this is what I see. This is why I think this. And, you know, this is what other people are saying. On every trade, you're going to have people that take the buy or people that take the sell. Somebody's going to get wrecked. Somebody's going to make money. And you can cut your losses, right, when you're wrong. So there is a video that we've watched in this group 1,000 times. Well,
IGT Birmingham.
and I know some of y'all don't remember it, but I remember my brother saying he never saw it before. But we're gonna see it. We're gonna watch it today, just a piece. We're not watching the whole video. Y'all remember this video?
Yes.
Y'all remember the 37-minute mark?
How can we forget it?
So, hey, I just want to.
The study
show you.
stopped. So we've already
My favorite,
heard the.
Well,
trading
I get it, but
psychologist. He says that
it's people that haven't heard it before. So I want to play this
They
video.
heard it from me.
And we're going to go on the charts and we're going to look at some stuff.
it doesn't take anything to be a trader. If you want to be a trader, the only thing you need to do is a click of a button of a mouse. Okay, the rest is all mental, right? So you need to practice to build your mental image of your strategy so that you can see it. And once your mind sees it, then you don't have no problem taking trades.
Nice. Perfectly said. Now, what about 3 things on a price chart? What would you recommend somebody study?
So when it comes to ICT stuff, I would say study. It is broad, depending on the kind of trader you are. I would say study stop runs. Study stop runs, and then study the daily time frame. Spend your time studying stop runs and daily time frame. How price moves on the daily time frame. Everything you ever need is on the daily time frame and stop runs. Because once they do a stop run, that's it.
And can you explain like a stop run quickly for people?
Right. So if you have, let's say, a swing high or a swing low, and price goes below it, price goes above a swing high, and then rejects. So if you have a daily swing high and the price goes above the daily swing high and you see a rejection, that's a stop run. So what happens after that, that's what you need to study on your daily time frame.
Okay, so everyone's been stopped out on the swing high.
Everyone, exactly.
Yeah. And so
that's where
it's
that's where the money is. So according to ICT, that's where the money is. So above a swing high and below a swing low, that's where the money is. So once they take the money, what are they going to do with it? They're going to run with it to a different direction.
right. That's where the run comes into it. I've heard stop hunt before, and but not the run, which is good. That's running with it in a different direction. I like it.
I like it too. What does that mean? What is a rejection? So.
I think it's you try
I don't
how-
like it.
Go ahead.
I look at it like a candle that moved down. The next candle didn't close. It didn't either break the high or the low, or sometimes it don't close above or below the open or close price.
You said rejection?
Yeah.
It's like when prices failing to go the way it was going, so possibly maybe it want to go the opposite way.
I agree 1,000%. So you have a wick right here, right? Before this added information, price comes up above this high to add these buyers, when these breakout buyers, when this price goes above that high, the breakout buyers get in for that buy, the rejection happens, and they get wrecked, price closes, cascades down, right? So you can go and you can look at these moves as they happen, right? And the same from the bottom of the chart, when you have a low and they come below the low, and price goes the opposite direction. And you just have to see if the information you're getting is information you can use as a trader. So whenever the market is ready to go the opposite direction, generally speaking, liquidity gets ran, right? And it depends on how much liquidity they need to move the market. That will determine which liquidity that they run, whether they run it from a 4-hour time frame, an hour time frame, a daily, or whatever. But my point is, once you see,
Excuse me, sorry. I think you just hit the main point there.
what's that?
Depends on how much liquidity they need
Well, of
to
course,
run.
of
That
course,
is the main thing there.
I agree. But I think for the purposes of this call and the people in the group, you have to get used to looking for this to happen on your chart. And in that conversation, in that Trading Net podcast, he's specifically referring to the daily chart, right? But this happens on the 2-week, the 2-month, the 2-minute, like price is fractal. So you can take the information and you can spread it across any time frame. And naturally, the higher the time frame, the more solid of a move that you can expect, or the more guaranteed, right? The larger time frames are going to generally play out more times than the lower time frames. You're going to get faked out on the 5-minute more than you're going to get faked out on the 2-month time frame, right? That's kind of what the point I'm trying to make here. So I bring all that up to get to the point, right? Because he mentioned the daily, I just want to go to the daily, and I want to talk about what I saw. I want to say it was Friday, or maybe it was Thursday, on the dollar, right? The dollar wicked the highs, right? Price came back and closed below, right? That in itself is, to me, I know we're going to go the opposite direction. I don't know how far we were going in the opposite direction at that point, but I knew we were going to sell, right? I've done this a million times. I've traded this concept a million times, right? But if you couple it, right, if you add this with the fact, right, if you understood market structure, how we came from this high to this low, if you throw the Fibonacci on this move, we hit the 62%, right? So this could just be a rejection. We could go a little bit lower and we can buy up to the 78, and then we could sell, or whatever the case may be. The point is, we rejected at the key area, which would have set up a great shorting opportunity, right? Now, how far you short this is another story. So we can clearly see that we have an imbalance down here that needs to be filled. I don't know when it's going to be filled. Only Guy and the market makers might know when it needs to be filled. But if you look at this, we pushed up, we broke these highs, we broke this high, and now we're shorting. So what could happen, right? What could happen is the market could sell down to this imbalance, right? And buy back up. I've already explained to you that on the higher time frame, on this 2-month chart, we did our analysis at the close of this candle, which was about a month and a week ago, right? A month and a week ago, we knew we had a bullish order block. We knew that price needed to sell back into this. But what we also knew is we like to see price come above this high, right? We wanted to see price come above the high before it started to sell. And right now we have signs of that. This is still very early, guys. Very, very early. So before you just hop in for a short down to this zone, you want to see this develop, a little bit more. Maybe you want to see a weekly bearish order block before you say, okay, I can wait for it to pull back on that weekly to get in for the short down to this zone. If you're a person who sees the trade early, or gets in a little bit early based on the stop run concept or whatever else you're seeing, this was an opportunity to short. And not only was it an opportunity to short, it also gave you a bearish OB. It might not be the prettiest bearish OB, right? You might not like it on NU. You might like it better on GU, or you might like it better on EU. My point is, across the spectrum of the dollars, we got the same action. We got the wicking of these highs, and then we got a bearish OB, right? If I go and look at the Dixie, which y'all already told me y'all don't trade, and I'm cool. Y'all don't have to trade it. But we got the wicking of the low. You either believe or you don't. And I'm not here to convince you. I'm not like the pastor, telling you that you got to believe a certain way. But what I'm saying is, if you see it, you see it. And if you don't, just trade the way you trade. But in my book and for my money, we go along. And whether we get back to this area or not is immaterial, right? There's several targets that need to be worked out on the dollar. But there is a possibility. There's a possibility that you have a 1,000 pip GU short setting up. How long that takes, I don't know. But if I just do the regular market structure, if I map my highs, pullback, high, pullback, high, pullback, we broke structure. Every time we broke structure before, we pulled back, right? And this last pullback on GU was 1,148 pips. Then we broke that high. We ran into an order block I had marked up, right? And if you fib it the opposite direction, if you fib this market the opposite direction, because we can do that too. We can look at this as a push down, breaking these lows, and this is a pullback. I know half of y'all never looked this high, so I get it. If you're shocked, I understand. So this is a push down, and it pulled back. This is right around the 78, in between the 78 and the 88. That's where we are right now. So even if this just pulls back a little bit, if this just pulls back a smidgen, like down to this last candle low is 420 pips. So I'm not here to convince you. or beg you to short. You know, I'm just here to show you what I see and tell you where I got the information. It's not something I cooked up in the basement or I'm making up. You know, this is what I've learned over my 5 years, trading and what I see on the chart, right? So nobody can tell you how long this pullback is going to take. Nobody can tell you if this is the pullback. But what you can do is you can go down to lower time frames, right? On the daily, it needs to break this low for a change of character to happen, right? On the 4 hour, it did break this low, change the character for me. You should buy back up to continue to sell. And then we'll challenge to see if we can break the low for the daily. All you can do is you can take the time frame that it gives you and you can trade to the next low or the next imbalance, right? This is just a pullback until it breaks a low. But this pullback could be the start of that pullback to that 2-month candle. And you just have to pay attention to the fundamentals. We had a pretty good jobs report. We've had bad news for the dollar for months, which is the reason why you had this run up. So when we have good news, we need a pullback. Here we go. Any questions? Just food for thought.
Does anyone have a question with regard to how to find an entry? Does anyone have issues with finding structure?
It should be like 24 hands going up for structure.
If you want to,
I looked up. Oh, let me be quiet.
Go ahead. Who was saying?
Speak.
No, I'll just wait. I'm sorry I'm late. Did you go over the indices yet? Because I wanted to share my chart.
No, we didn't talk about indices. And really it's not important the specific asset, the kind of the point that I'm trying to make is your swing structure is what's going to guide you in what trades that you should or shouldn't take, right? And if you're taking a counter trend trade, a substructure trade, you can only take it to probably the imbalance close to the low or to the zone, demand zone or supply zone, that you're taking it to. And you shouldn't try to take that substructure trade past that low. You have to wait to see what the next move is because it might bounce from that low and go higher. Does that make sense?
yeah.
Yes, sir.
What was your question, Nawaf?
I don't have a question. I just want people to be more active and not feel ashamed of asking questions.
But what did you ask?
I have.
Go ahead.
Hi, it's Marcia. I had a question. I did log on maybe about 15 minutes late, maybe. So far as entries, I do recall we were talking about rejection and you asked what rejection was. Is that when we take entry after rejection? Because I know it's probably another step after that.
Okay.
Okay, what is your definition of a rejection, Marcia?
That's why I asked that.
When a candle continued to not go that. Okay, so if the market is bullish and there's a candle at the highs and is failing to close above that, or it just keeps rejecting. I thought that's rejection.
Okay.
From a certain area.
But okay. Now, the question is, the next question I'm going to ask is, what does it need to reject? And after reject, see, this is what you need to ask yourself every time you're looking for a rejection. Okay. One, where is it rejecting at? Two, are you seeing any form of rejection or like say, okay, let me rephrase that. Are you seeing a bullish or a bearish engulfing after the rejection? Are you seeing a change of character or a break of structure after the rejection? These are the four things you need to ask yourself before you look for like a trend change. So if you don't understand that, Todd, do you mind if I share my screen real quick?
Yeah, go ahead.
Can I say something? Good morning. Can I say something while you're doing that?
Mm-hmm.
So I think that it's important that you have an area of interest first, right? So like you know how Todd talks about, and everybody else talks about a top-down analysis. You want to have an area of interest, and
Yeah,
then
but the thing is, Naima, some people don't understand how to find that area of interest. You see what I'm saying? You may see that
Me, I
there's a
don't
lot of
understand
people,
how to find area of interest.
and
but
there's
that's what
nothing
I'm
wrong with
saying.
that. That's completely fine. That's part of the game. It's a learning experience. But we as educators, we will not be able to understand what you need if you don't ask. And I appreciate Marcia for asking these questions. You see what I'm saying?
No, I think it's a great question. You were,
Yeah.
never mind.
So, points of interest, yes, 100%. I agree with you on that, Naimo. Now the question is, okay, if I'm to ask Marcia, do you know how to look for a point of interest? And you can answer that, Marcia.
I would say a higher high.
Okay. A higher high, but what else?
Um,
And there's nothing wrong if you don't understand that, Marcia. We're here to help you understand that. You see? And a higher high, yes, of course. But do you know how to look for a higher high? Do you know how to look for a structural higher high? That is the question. And again, I'm not here trying to.
What is the
Hold on,
high
Andrew.
point of interest?
Hold on, Andrew. There's nothing wrong with not understanding it. You see what I'm saying? Because that's the only way you're going to be able to understand it is when we show you that on the chart, what to look for. You see what I'm saying? So remember how that video that you guys watched?
yes.
Okay. He was talking about the swing structure. Okay. You see that? Now, all you need to do is put a zone at the swing structures and see how price reacts off these zones. You see, Todd was talking about on a higher time frame, he was showing on the 2-month is if price needs to break the high and then you get a sell-off. And he did mention the chart is fractal, meaning what you find on the 30-minute, you're guaranteed to find on the 2-minute or even the higher time frames. So this is what Todd was trying to say. Now, in terms of a rejection, there are two types of rejections. There are the ones that, say, for example, reject off a zone like that, And the ones that basically give you a false breakout, taking out all this liquidity. Okay? Now, in terms of if price comes to a zone like that, okay? Let's just say hypothetically we had a wick and we covered the whole zone. Price will tap in, never breaking the high. Okay? All you need to look for is a break of structure on a lower time frame. So, what I mean by this break of structure is this. We break. That's our break. This was our pullback. You see what I'm saying? But then if price was to continue going higher, Marcia, price would have broken that high, right?
Yes.
But it didn't. You see what I'm saying? But instead, what happened? We created a higher low, and then what happened? We broke. So next thing is what you want to look for as price is printing out is a bearish engulfing. You could have entered here as price rejected because that's a bearish engulfing candle, or you could have entered here because that is a bearish engulfing candle that broke, as you guys would call it, a change of character.
Okay.
You see what I'm saying? So once that happens, I don't know if you trade fair value gaps, but this is your fair value gap right here. You can take a trade anywhere around this area. If price was doing this. So you got the break. Hold on. So that's your fair value gap right there. You could have entered anywhere around here. Does that make sense, Marcia?
Yes.
So it's just a matter of understanding what to look for. Now, in terms of how long do you hold your trades, just look for the swing structures. So for me, this would have been TP1. This would have been TP2 right here. And this would have been TP3 right here. Swing structures.
So you're looking at the lows?
Of course.
Okay. Okay.
Because at every swing structure, you're going to face a rejection. And like Todd said, we don't know if price is going to break through. But why not pay yourself as it hits these points? Stop being greedy.
Okay.
How many times have you entered a trade where price was doing this and then he said, it's going to go lower. Next thing you know, everything that you made gone in a single trade. How many of y'all? I myself, I'm guilty of that. Naima, Todd, Michael, Andrew.
Yes, absolutely. That's my problem. Yep.
Okay, and that's normal.
It happens.
That doesn't mean that you don't know how to trade. No, you're just being greedy. We as human beings are born greedy. You just need to learn how to partial your trades. That's it. So, train of thoughts. Hey, Todd, sorry I hijacked this whole thing, man, but it's just I had to speak up about this.
I have another question.
Go ahead.
So it's because I'm not used to looking at the higher time frames. So I think that's where my problem. I didn't really know about structure, which I'm learning through you guys, and higher time frames. I'm used to looking at 15 minutes, 5 minutes, and it's not good for me. It's just been bad. So I knew
So
I was missing a lot
you're
of
saying
learning.
looking at the higher time frames or the lower time frames once a year?
I never really paid attention to a daily chart, 4 hour chart, but maybe an hour. I just wasn't trading right. I'm 15 minutes, maybe 30 minutes, 5 minutes is what I'm looking at a chart. But now I'm understanding that I need to look at a daily. I need to look at a 4 hour, and I need to know structure. And I really didn't know structure.
And there's nothing wrong with that. I'm glad that you are noticing that, you see, because that way you can work on it. And just
Yes.
remember, you're not going to be working on it by yourself. You join this Discord so people can help you with that.
Yes.
But
Yes.
I've noticed majority of the time, Todd takes a lot of time and effort out of his day just to come and, show you guys what to do. And majority of the time, whenever I step into this, it's just one person or two people who are basically asking questions. No, Todd or anyone else cannot help you guys if you're not asking questions. To us, we understand the market, but if you're
Hmm.
not gonna, I mean, we are not going to spoon feed you. You want to know something? Ask the question. Forget about it. Forget about thinking that it's a silly question or there's no such thing as a stupid question when it comes to Forex. You need to ask it.
Yes.
And trust me, it makes us all happy because we know it shows us that you guys want to know what's happening. Why is it happening this way? What's the reason that it's happening this way? You see what I'm saying? But so
Yes.
you see how price rejected that low right now? So if you were to enter a trade, so say for example, right here, stop loss about that, price hits that. If you are in a 2 lot size trade, you'd be taking out 50% and moving your stop loss to break even
Hmm.
and go about your day. Because the most important thing is paying yourself. Make sure whenever you enter a trade, you pay yourself. Don't wait for price to go all the way here, do a pullback, and then this is where your whole anxiety kicks off. So pay yourself so you don't need to worry. So what if the price comes back and stops you out? Come tomorrow, you're going to find the same setup at the same time. Just take it. So you see, look at the rejection of these zones. And look, this is no coincidence. Look how price almost comes back and taps into that and then goes. Probably probably even going to come down and tap into it. So
No, I
you
have
get
a
it.
quick question. I
Go
have a
ahead.
quick question about because I don't want to deter Marcia from asking something, but I just want to just know this real quick. So usually, like you were talking about just being greedy about taking profit at liquidity points.
Not
Um,
liquidity
do,
points, structure
are
points.
you well? Okay. I do have a question. So, do you are there certain time frames that you're taking profits from? Because I'm looking at everything from 5 minutes, the 15 to the 1 minute, right? Because sometimes I'll see a reversal there. So does it matter, or do you have a certain time frame that you're looking at
Okay.
to take your
So
profits from?
let me explain to you what you just asked me. Okay.
Mm-hmm.
Now, this is going to go back to what Todd was showing you earlier, why you need to understand swing structures. Okay. So this is a high time frame swing. This is a high time frame structure. If you go to a lower time frame structure, this is what you're going to find. Does that answer your question?
Yes, it does. I know what to do. Yeah.
But the market does this every time. So to answer your question, obviously the higher time frame is going to hold more value. You see what I'm saying? So that is why you need to understand swing structure, because at the end of the day, the internal structure can do whatever it wants, prolonging that it does not break your swing structures. Sorry, I don't know where that came from. You're good.
Okay. Okay. That's all.
So
Marcia, you can. Oh, go ahead.
So to answer your question, I would always look for, in terms of structural points, I wouldn't go lower than 30 minutes to look for structural points.
Okay. I was about to ask that.
I feel like 30 minutes and the higher time frames is the best when it comes to structure. Because if you can understand structure on a 30-minute, that is a whole day of a swing. That's a bearish candle on a daily. You see what I'm saying? So this would be an inside day candle on a daily. Why? Because it never broke the previous day's high or the low. It stayed within the range. You see what I'm saying? So I wouldn't, Naima, I hope that answers your question.
Yes, absolutely. It does.
Can I say something, Noah?
Yeah, of course, bro.
Because when Naima asked that question, I understood the question a little bit differently, and maybe there are other people that understood it a little bit differently. When you mark out your swing structure, right? Let's say you're on a daily and you mark out the swing highs and swing lows. It doesn't matter what time price hits that swing high or swing low. Whether you're looking at the 5-minute chart or the 1-minute chart, it doesn't matter. Your swing high is going to be your swing high, and your swing low is going to be your swing low. And you should take profit whenever it hits that area. It doesn't matter what time of day or what time frame you're watching it on, because your area doesn't change. The swing high doesn't change, and the swing low doesn't change until either of them are broke.
Exactly.
Can I ask a question?
I have a question for both Todd, Nawaf, and every other person in this group, right? So for me, I feel like we are deviating from like what we are talking about right now. The question was, what are your point of interest? We haven't hit that point yet.
Okay.
And
So
the second question is, what do you guys feel like? What do you guys know that the market is constantly doing? Because with these two things, everybody in this group have to be profitable with just these two things. What the market is constantly doing, and what are your points of interest? It's not where to take your profit from or something like this, your entry. You first of all have to know what the market is doing and what are your points of interest. Somebody asked, a point of interest is like a higher high. That is not answer or question, or I don't know how to put.
Well, I agree.
What are your points of interest, and what do you think that the market is constantly doing? This market is constantly doing three things.
Collecting liquidity.
Those three things are your point of interest.
Well, I agree, Andrew.
I want you guys to elaborate on that.
Well, okay.
I will just make it simple.
But Andrew, I hear what you're saying, and I agree, but I think you have to have a basic point of reference before you can get into talking about balancing and rebalancing, like seeking liquidity. You have to have a reference point. Everybody has to understand the market is going from a balanced state to an unbalanced state. Then it seeks rebalancing before it goes to a different state. You have to have a basic understanding of what you're looking at, right? If I talk about highs and lows first, then I can talk about impulse moves and imbalance and all that good stuff. I think you have to start from the very basics. And I think we make the assumption that people leave this meeting and go study. Well, we shouldn't make me, you, and Nuwaf talked about this a couple of weeks ago. People don't leave here and do more studying. Some people use this meeting as the sole method of their information. And that leaves a gap in understanding. So in order to try to break it down to a basic level, I think we have to talk about it in highs and lows and that kind of thing. And then you have one-on-ones or you have other meetings that kind of explain it more in depth. Does that make sense? I don't disagree with what you're saying about what the market is seeking, but I think without a basic understanding, it's going to go over everybody's head.
I agree with you on that, Todd, 100%. But to answer Andrew's question, and I agree, we've diverted away from that. Price can do two things. Okay. So let's say, imagine that you have a day. Let's just use this for an example. Actually, no, let's use this one. This is perfect. That's why, for me, if you come to me, I'll say I always look for my previous day. If you go to Todd, he will always tell you the previous week. Correct me if I'm wrong there, Todd. Okay? And
No, you're
then
right.
other people will tell you, I don't know, maybe the previous 4-hour candle, whatever it is. Okay, it depends on what you're comfortable with. Okay? So we can see over here, that was our swing high and our swing low. Price can do three things. Okay? Break, continue. Break, continue. Or give us a range day. And then after that day, we do either of these two right here. Okay? The market works in a box. Every day is a box. Okay? So look right here. What happened when the box broke? Did we not get a retest? See? So you need to think of it, and now you're probably going to ask, why do I have these zones? These are my Asia sessions, my London and New York. Each of them are boxes within a daily or previous day box. So it's just a matter of, so let's just use this one. I'll give you a prime example right here. So you see, look. What happened when price break above? Volume. What happens when price breaks below that? Right there. So, Andrew, I hope that answered what you were asking. If not, do elaborate, please.
It doesn't, but at the same time, it does.
Yeah.
For me, I understand what you are doing. I don't know for someone else, right?
Mm-hmm.
Like what Todd say, I don't know if this is the class for that or some other class, because the reason why I asked this is because we were talking about a point of interest, and like you know, when candlestick wicks above a high or below a low or something,
Yeah.
So those are the things somebody asked, and we needed to make it clear for them. But but other people asking like different questions, so we kind of close that chapter. So that's why I brought it back, because
No, it's good that you
the
brought it back.
person who asked the question, I don't know if she got an answer or not. Because a point of interest is where markets usually react from, right? That is why it's called a point of interest. Because we expect market to react off that level, right? So coming back to wicks, like like a rejection. That is why we said once price sweep above or below a low, above a high or below a low, we want to see a rejection. So the reason why we want to see a rejection, so we want to know, because lows and highs, old highs, old lows, which or however you may classify them, whether your previous weeks high, previous day high, previous month high, it doesn't matter. They are your what? Highs and lows, old lows, old highs. So once price trade above or below such level, we are looking for a reaction. So if we get a rejection of that level, after that, you just have to maybe lower your time frame if you're in a higher time frame to see what the market is doing after that rejection of the high or a low.
Yep.
Highs and lows are one point of interest in this market. That is why you see people are always constantly marking whether previous candle high or low. It doesn't matter which time frame it may be. They are points of interest. And you should also know what forms a high or a low. What forms a swing high or a swing low. I don't know if any of you also know that, because the question you guys are supposed to be asking, you are not asking the right question.
I'm gonna jump in.
Swing low looks like.
Hey, Andrew,
what makes a low a swing low a swing low? You have to ask such questions.
I wanted to say something to that, because Andrew just hit something that's super important. I think that's something that the cause for this, Delaney, is until you know what the right question is, we're using. I'm saying this from a student standpoint. We're using these calls to find out what the right questions are, right? So depending on where you come in at, whether you're brand new or you've been around information for a while, you may not know how to ask the right question or pose the right question. So that's kind of, you guys are asking, hey, ask certain questions or ask this and that, until you kind of know what's the important pieces, right? You're kind of just soaking up everything until you know what it is, the right question. So you hit it, but until you kind of know what the right question is, that's kind of what a lot of us are in the discovery mode. We're still kind of looking for, okay, where are we pinpointing the right questions to be at? And I think also too, knowing that you guys have different trading styles, that's another question where someone kind of needs to focus into is which one of these styles or what is resonating the most with me. That makes sense.
So that's a very good point of points that you pointed out, Delaney. But at the end of the day, I don't care what anyone says here, and I'm not trying to sound arrogant or anything. If you do not understand market structure, no matter what strategy you trade, you're gonna fail at it.
Correct. And that's something all three of you guys have said. Like all three of you guys have mentioned market structure, market structure, market structure. So I know you guys have been focusing on other areas, but I know that's been the biggest key point that all three of you guys have said. So that'll be like a main focus, right? Like I'm looking at as, okay, how is market structure being looked at through this eye? How is market structure being looked at through this eye? How is market structure being looked at through this eye?
So going back to Andrew's question, which he stated a very valid, what is considered a low and what is considered a high? That's a very, very nice question. So my question to everyone here right now, and I do want some interaction from everyone. When is this considered a low? Right here.
When that high gets broken, that previous high gets broken.
All right.
Okay, anyone else?
Previous low.
So that is considered the low when this high is broken. Okay.
Somebody
Now,
Hey, Nuaf.
yeah,
So basically, you're saying that's considered a swing low.
exactly.
high is
A
broken.
swing low when the swing high is broken.
There you go. Okay.
Thank you for clarifying that, Todd. So when that becomes when is this considered or established as a swing high?
Once the low has been created.
Once this low has been broken.
Exactly. But then when that is broken, where is the newly established swing lower high or lower high? Who can pinpoint it out? Guys, come on, some interaction.
The blue London. Yeah.
Yes, exactly. So if you're seeing that right now, what is the difference between looking at structure the way you're supposed to see it now? You see what I'm saying? So,
but hold on, that is not the swing high. You have
he
to
said the recent
any
high.
pullback.
I said the recent.
After a low has been taken.
You said the recent high, Andrew.
Recent.
The weaker high.
No, recent.
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 Or LH.
Yeah,
lower
but
high.
what kind of high is this? This is not a high. When a low has been taken, any pullback, it doesn't matter how far it goes, that we consider as a high. Not the swing high, but a little high.
Lower high.
No.
It's a lower high.
A lower high.
That's what
it's
he
not a
asked.
swing high. This is not a swing high.
Andrew.
After a low has been taken, that
Andrew, listen.
Andrew.
Yeah.
That wasn't his question.
That wasn't my question. You're right, but that was not my question.
You're right.
Oh, Todd,
He's on red.
Relax.
He's on Asian session.
I love the passion. I love the
I
passion
would
from
like
y'all.
to elaborate on that if I didn't hear it correctly.
So my question was, Andrew,
Yeah.
first of all, once price broke, we were all on the same page here.
Yeah.
Once price broke there, I asked them, what is the recent high after price broke? Structural swing high. Everyone said it was this. This, for me, will only be considered another recent high.
Hold on. Before you go further, I want you to clarify this kind of a high, right? Because what do you consider this high to be? What kind of a high? So are you telling me now that are you telling me now that if this high is broken, is this a change of character or a break of structure?
No. If this high is, which one are you talking about? The blue?
This one right here. Because if you call this a swing low, right?
Mm-hmm.
This is a what? A swing high.
Yeah.
And what is this?
It's a lower high.
Yeah, a lower high as in what? Because we have three types of structure. A swing structure and the middle structure before a lower time frame structure.
Okay.
That's what I'm asking.
Yeah.
What kind of high do you consider this to be?
A lower high.
That is swing structure, buddy.
It's not a
Because
swing structure. This is your swing structure. Swing high right here. This high can be taken, this one can be taken, until this high is taken before you will consider a new swing structure. This price can take this, it doesn't take any swing structure. This is the swing high. That's why I'm asking. This is just a middle time, because we are even in this time frame. That's why I'm going to call it a middle structure. Todd, are you here?
Yeah, I'm lost. I'm lost.
Yeah, I'm here, but I think you're saying the same thing New York is saying.
Yeah, we lost. Yeah, we lost.
These are lower highs. That's the same thing New York is saying.
Yeah. That's exactly what I was saying.
He's calling this a swing high.
No, he called this a lower high.
It's a lower high.
It's a lower high swing structure.
He said this was a swing low and this was a swing high.
And he asked the class, where is the most recent high?
Yes.
Which is where we determined the lower high within the structure of the bearish market. We didn't even get to the end of his session before you jumped in.
Continue now.
Go ahead, Professor. We back on track.
No, I like having these conversations with Andrew. We usually have it every night, me and him. We go over things like this, me and him. This is where we basically pick each other's brain, and I like it.
No, yeah, for sure.
So for me right now, like I said, this would be considered the recent high. Why? Because it has broken structure. Now, if price ends up doing this from here to there, where is going to be my next recent high? Lower high. It's going to be that.
Yeah, that one right there.
You see what I'm saying? And that's how the market moves, guys. So the videos, any video that you see, you need to understand that concept. So I know what Andrew was trying to say. Price can do something like this and then break to continue to the upside. You see what I'm saying? Because at the end of the day, price never broke this low. At the end of the day, you're ranging between that low and that high. So as price comes back, you might get a deep pullback and then a continuation. A majority of the time, it will come back to pivotal points, which is somewhere like here or somewhere like here. Prime example, pivotal points. You can see price came back where? There. Pivotal points. You can see this right here. Where did the price come back? Top. We don't know if it's going to continue. You just need to be patient and wait.
Yeah, so I was gonna say, for the sake of the lesson, right? Where price is currently, when you have the areas marked out, it could be looked at as a retest to the bearish market, or it can be looked at as a fake out since it just took the imbalance to the left where that previous green area is, which is also an area of demand. So that's when you're saying, well, it kind of didn't fully feel it, but so that's when you're saying wait, and then that's when I think when Todd was saying look at the Dixie as well for correlation. So when we were discussing areas of interest, so.
But anything can happen because look, remember what I said, pivotal points. You see, prices come back, retested.
Yeah, so what I didn't want people to, like, it could potentially be a retest to the bearish break, but it can also be a fake out that was taking out liquidity and continue to push bullish.
We wouldn't know until Asia range is filled. Does that make sense?
Mm-hmm. It's in a pivotal area where we have to watch to see which way.
Well, we need Asia to fill out. That's for one. Asia needs to create its range first in order to understand where price wants to go. So the market always does this over and over again, guys. So let's say this is Asia. Okay. Majority of the time, price will come during London. If you have a point of interest right above, it will tap, give you a breaking structure or change of character and go to the downside. Prime example of that, and you'll see it usually on the 30 and 15 minutes. Right there, look. You see? You'll always get that. Market does that day in and day out. So price doesn't just move the way it's supposed to move. No. You need to understand that banks and institutions have placed pending orders at points of interest.
Can I also say something here, Nua?
Yeah.
And this, because I'm a higher time frame guy. If you can, just for me and the people who see or who follow the way I trade, can you go to the daily real fast? Squeeze your chart in for me. Okay,
just clear it up for
and make like squeeze the numbers down a little bit on the right hand side. Okay, if you leave it right here. So for me and the people who trade like me, this market came, pulled back, went higher, right? Pulled back, or you might look at this area right here as a pullback before it goes higher. And you can look at the line chart. For me, if you're looking at this area right here as a pullback, this would be a swing low for the market to go higher. So your swing low would have went across here. And this, when this market came down and closed below your swing low, for me, it would have been a change of character. At which point I would have fibbed from this high to this low and expected the market to pull back, and I would have been looking for a short to go lower. So this is exactly what I think, when I look at this market. But I look at the market from a higher time frame. If you're looking at the market from a lower time frame, you might not ever see that this swing low, if you're looking at that pullback as a swing, got broken. So you're kind of wondering whether or not the market is going up or down. And I've got an entry here to go lower. Now I still have to monitor my entry to make sure it doesn't break, break out and come back up. And as it creates lower level structure points, I might be able to move my stop to those structure points to make this a no risk trade. But if you don't ever see the higher time frame structure points, so you don't ever mark them out on your chart, when you drop down in those time frames, it's impossible for you to understand why the market is doing what it's doing.
Mm-hmm. Yep.
Now, Todd, just for argument's sake, right? Just to provide perspective, would you not consider that break of that swing low a rejection based on the way the candles look? And then when it pushed up, it broke above that previous order block, I would say, on the left.
No. So listen,
okay.
That's a good question. But this would be the swing low. Like if you go to the line chart, this would be a swing low. This didn't break the swing low. This did.
No, that's the candle I'm speaking of. So that candle broke below it, which was your change of cap.
This would be my swing high, and this would be my swing low.
Exactly.
And this is just a pullback. So if you measure, where would that pullback be?
Wait 1 second. So your swing low, right? It formed a wick, which can appear to be a rejection, right? And then when it pushed up, it broke above that internal low. So no, it didn't break above the swing high yet, but there's to the left, you see right below that swing high, there's another high. No, up one more. Yeah, where that red dot right there.
That means absolutely nothing.
Okay. I just wanted to make sure for argument's sake, because
none of
it looks like rejection. Okay.
We're operating, in my opinion, I'm operating between swing high and swing low. And what I want to see, if I enter a short right here, I want to see these structure points start to get broken.
Okay.
Does that make sense?
Yes, it does. I'm seeing it both ways because.
And listen, I'm not saying you're wrong. I'm just telling you how I look at it. Now, I do expect the market to react, just like it tapped that imbalance and reacted. But as long as it doesn't run through this high, I don't care. React all you want. It's going to be pullbacks. But as long as you keep pushing down to break lows, I'm cool.
Yeah.
Can I ask you a question?
Yeah.
Like, do you enter on the daily time frame, Todd?
No, this is daily structure. I can enter on the 15-minute once price hits my 78. I can enter on the 1 hour. Remember, Andrew was asking you how you get your POI, your zones. So if you look at this, man, I just lost my mouse. But if you look at that structure that pushed down and broke that low for me, is there an imbalance? Do y'all see an imbalance at about the 78?
Up there.
Yeah.
That's where it went to.
That's a POI. That's a point of interest for me.
Yeah.
Okay.
So once price hits that POI, I need to be down on the 1 hour, on the 15-minute, on the 4 hour, looking for rejection, looking for a change of character.
So
are you on your replay mode or what?
What's that?
Let's go over this, what Todd is looking at, guys. Let's just break it down for y'all. Okay. So price comes back. We're going to wait for price to come and tap into this right now. Okay. Let's go to the 1 hour.
You didn't mark the fair value gap out.
Price taps in. Okay. So this is what Todd is trying to explain. He's looking for a change of character over here. Once price taps in to his point of interest, he's looking for a change of character. This is what he's trying to explain. So now that is the swing structure right there.
Would you set a limit there, or would you just
No, of
start?
course not.
Okay.
Unless you're a risky trader and you want to have your stop loss be this, by all means do it. That's 90 pips of a stop loss, man. You got money for that?
But you have the ability to set an alert. So when your alert goes off, you know to go and look at your chart.
Exactly. So what you're looking for on the 1 hour is you want to see an established pullback where price respects this high.
Yes.
You see what I'm saying? So as price is playing, now we see a pullback that took place right here, trying to make a high, but we failed because we got a wick rejection. All you need to do is wait for price to break this low, because that is your pullback after the break of structure right here. Michael, does that make sense?
Yeah.
So as price is playing, you got your pullback, break, high is still being respected. You see? Boom. That is what you want to wait for, and this is what Todd was trying to explain. Once it enters your point of interest, you can take the trade on the 4 hour, the 1 hour, prolonging, you know what structure looks like on that time frame.
Can you go to the 30 minutes? Just have a look at that.
It's the same thing. So you can even wait for price to break. Yeah, I would wait for this because that is the newly formed low, because that was the pullback. Price should have continued from here to break that high, but it didn't.
Okay.
But what Andrew would be looking for is price to come back and tap that. Or maybe even this right here. Andrew, correct me if I'm wrong, if you're here.
I'm here, but not that one.
This one, right?
Not even that.
Which one?
This
You're
last
looking at this one.
Yeah.
Yeah. So as price taps into your point of interest, and this is how the benefit of trading on a higher time frame. But the only downside to it is you need to be very patient on your trades. Like, you will need to wait for price to tap into this, then make a decision. So if you catch trades like this, yeah, they can go in for days for you. So let's go back to the point of interest again now. Let's go to the daily again, real quick. Yeah, price ends up pushing higher. So as price comes back down, you can look for an order block again, right there. So look, we'll bar replay this. Go down to the 1 hour if you want. Price taps in. Now you want to wait for, now that we've broken structure, you see? We broke structure right here. This is our pullback that's happening right now. So in order for price to continue going lower, we want to see price push down from here. But if it doesn't, It needs to break this structure right here. So you see, we get our pullback, but it failed. So what's the next point of interest? You're looking for price to go higher. It was right there. As price breaks above it, you see, you get the pullback. So every time that the price breaks a point of a major structure, always expect a pullback. And the pullback needs to be visible. I'm not talking about a pullback like this. No. This pullback will be considered a pullback at a higher time frame, like 4 hours daily and a weekly, yes. But when you're on a lower time frame, I'm talking about the 2 hour, 1 hour, and 30 minutes, you need to see a V-shaped pullback. You have to see a V-shaped pullback.
Why is that important for the V shape versus a short pullback?
Because this is going to reflect a higher time frame pullback, bro. So this on a daily or a weekly will probably be one black candle, a doji looking candle to continue higher. You see what I'm saying?
I got you.
So you see this right here, this overlay? You see these candles over here, guys? That's my daily right there. So you see how this whole pullback was one candle? Like I said, I want to see a V shape when it comes to the 2 hour to the 30 minute and lower.
And you can also see on that candle where the market needs to come back to close this imbalance right here.
Yeah, right there.
That's right there. That's what you're looking at right here. So you want to see the market pull back to this area to either go higher or fake like it's going higher to go lower. So the market needs to come back to this area. This is the POI for me the next time.
Yeah. Exactly.
Can I share my chart?
Yeah, of course.
I just wanted to make sure. I didn't know if you were finished. That's all I was just asking. Okay, so
Michael, you
I'm
want a
gonna
stop run?
start.
I'll show you some stop runs.
Yeah, just an example.
Okay.
Oh, do you want to show that first?
No, go ahead.
This is not my.
There's a stop run right there on her chart right there.
Yep, exactly. That's a stop
Here
run.
it is. Okay. Oh, you want me to go back to it? Or
Go back to
you
the 4
good.
hour just for half a second. Or
I
go
am
back
at
to
the 4 hour.
What were you on
Oh,
before? 1 hour?
I don't know what I was. That's old. That's not correct.
Well,
That's not what I was.
wait. That's a stop run.
Yeah, that's my liquidity. Okay, go ahead.
Yeah, it's a
Sorry.
liquidity grab, a stop run. It's the same. It went
Okay,
to
that giant wick.
Yeah, the wick went above the level, right? Breakout buyers got in to buy, and then they got wrecked.
Yep.
Okay.
That is what we call a false breakout reversal.
This should continue to fall next week.
And you'll
You
always
talking
see
about my chart? Oh, sorry.
Yeah, the
No, go
US
ahead.
30.
You
NASDAQ
talking
has
about my chart?
Yeah.
Yeah, I'm looking for a pullback. So these this is my so okay, let me just do this first because I understand that there's some people on here that may not
Well, Marcia,
understand.
you can have more sessions like this, prolonging everyone interacts, like how we're doing today. This is how everyone's going to learn by asking questions, sharing the chart, putting yourself on the spotlight. That's how we can help you guys. Every once in a while, you'll hear me, Andrew, or Todd go against each other, but at the end of the day, we all see the same thing. Go ahead. Sorry.
Everybody has a ego like Elon and Trump, and you can expect it, so it's all good. Elon
So
and Trump,
before
like one of y'all is Elon, one of y'all is Donald, and maybe one of y'all can be Steve Bannon, and we would expect Clash of Titans.
Go
Okay,
ahead.
so before I explain this, right? Because I don't want anybody to be lost, because there's different types of people on the call, right? So for me, the way that I see the market, and this piggybacks off of pretty much what Nawaf was saying. Anytime you're looking at a chart, right, and you ever like feel lost, just understand that the market moves in three phases. It's very simple. Like Nawaf was saying, I have to move this. Give me 1 second. So for me, you're gonna see the market move like this, right? You could call this sideways, okay? The market moves in an uptrend, all right? And oops, didn't mean to do that. And the market moves in a downtrend, okay? Those are the three things that you're gonna see. I'm sorry, that's not as clean. But those are the three things that you're always gonna see on the chart. You're gonna see market moving sideways, you're going to see it moving up, and you're going to see it moving down. Depending on how you want to trade, right? I'm not going to get in this. As you mature or you learn more about trading, you're going to find out that people call this accumulation, right? This is when the market is ranging. And then it'll go either to the upside, right? It'll be a bullish trend, or it'll go to the downside, being a bearish trend, okay? And I want to just explain this basic concept before I go into my chart so you can understand, because I want everybody to be clear about what I'm about to say. So again, the market, like Nawaf was saying, has three phases: accumulation, the uptrend, or the downtrend could be the manipulation, or one of these could be the distribution. You don't necessarily have to worry about those terms right now, but just know that in any time frame, the daily, the hour, the 5 minute, you're always going to see these three things happening. All right, that's it. So for me, I went and I looked at the daily first, well, the weekly, and the candle, it wicked above above this previous candle. I am bullish and bearish, and I'm going to explain why. All right. And I'm going to go down to the 4 hour here. All right. Because it just I'll go to the daily. No, let me just go here. This makes more sense. You can see more what's happening. So as Todd and Nawaf was saying, there is a draw on liquidity, all right? So key levels for me, right? When Nawaf was talking and Todd was talking about not a break of structure. Well, yeah, when Nawaf was talking about entry points, right? Price came and this was Friday's high, okay? Friday rejected off of that high, right, and started to sell. So as you can see here, this was the previous week's high, right? I'm going to put a line so you can see what I'm talking about. And if anybody has a question, I don't want to confuse anyone. I'm trying to make this as simple as possible. So this was the previous week's high, okay? This was the highest point in the market from last week. Price came, and as you can see, it broke this high, right? So at that point, you would be looking for a rejection, okay? That's where that rejection came in. So on a lower time frame, I'm looking for a change of character, which could have been an FVG, and that actually happened. It was like a 1-minute FVG, and then price eventually fell. The reason why I'm looking for buys and sells is because
I have a question.
Yes.
Go back to the time frame you were on.
Yes, sir.
Is this a rejection on this time frame?
I'm talking about this was before. Remember, we already talked about this, Andrew. I was just explaining why price
No, for
broke.
the sake of your explanation, I'm asking, is this a rejection on this time frame?
You're
Because
talking about here?
if you extend this chart like this, is this a rejection or a break on this time frame?
Hold on a second. Well, this is a break of structure. Yes, it is. But I'm talking about this wick. This is a rejection to me. So that was the previous day high, and that's BSL, and that's buy side liquidity. And don't worry about that. That's external range liquidity. But to make it simple, I'm just trying to be mindful because it's, different types of traders on here. So I see this as a rejection, right? Price rejected here. It broke structure, and then it rejected. And then you saw price sell. Price sold into the 1 hour imbalance, right? Which was also, it sold into that, and now it bought. So for me, I'm looking for the closest draw on liquidity, which I believe is the BSL up here. So maybe London might run this previous day high and sell back down. And I know Todd does not like the 15-minute, but I could see price coming and running this, or price can come and run this internal range liquidity right here, or it can come for the previous day low. So, which is also sell side liquidity and external range liquidity. So those are my 3 areas. There is a spot here. I am not like feeling it that much. I don't know why it's not showing, but there is a 5-minute, a 15-minute FVG and a breaker. And then there's a golden zone and the 1 hour, right? But I don't really like this that much. I want to see price either come and give me some activity here or here. But if I'm on the charts and price happens to do something here or here, if there's a rejection here and there's a change of character, then I'll take it from there. There's a lot of corrective movement here. So I'm looking for price to come and sweep this eventually. And there's corrective movement here. So that's what I have. I'm open for any suggestions and then this is the previous day low here, but I'm looking for a move between here and here because this is over 5,000 pips. So I believe that price is going to do something between here and here. I do have the previous week low lined and some other sell side liquidity, but this is pretty much what I'm looking at. To take a move. But yeah, if you have any, if anybody sees anything else or you know, where I could be sharper in my analysis, I'm welcome to it.
Okay. Are you open to constructive feedbacks?
Yeah, that's why I share my chart because I
All
want to
right.
get better.
Now, at the end of the day, yes, the markups are on point, but at the end of the day, you have a playing field in which price has not broken out of yet. What do I mean by that? Price has not broken either above that or below that. Why am I telling you this? So the more points of interest or of information you have on your chart, the more complicated you're gonna end up thinking in the chart. Does that make sense?
No, I agree. Sometimes I'll have multiple points of interest and then I'm not sure where price is going to go. So I just have to wait.
Yeah, exactly. So, what I would advise is, remember, we are doing this not to complicate it, but to simplify it.
If you're still
So,
talking, I can't hear you. I didn't
yeah,
hear
no, I
anything.
just had to deal with my son real quick. So, what am I trying to say is there's no point of thinking of all of this right
Mhm.
now since price is literally within that high and that low.
Okay.
Because we as human beings, we love to wish for things. You see what I'm saying? What am I saying is, I, for one, myself, will do this. If price breaks above this, I'm automatically thinking, ah, yes, it's going to go all the way there.
Well,
But,
I would be looking for a change of character first. 'Cause I would see how price would react off of the previous day high and that BSL. I'm looking to possibly sell there, but I'm not sure. I'd have to see price action on a lower time frame. That's just
and there
me
we
though.
go. That's what I
That's
was
what
trying to
I'm
say.
looking for. That's why I had it marked.
So this goes back to the second thing that I'm trying to mention. Say you
Hmm.
took an entry right here, okay? So
You
you took a
talking about
long,
where the
no,
purple area is?
do you not see my drawing? Can you see my drawing?
Okay. Yeah.
Do you see it? Yes or no?
Yes, I see it.
Okay. Say you took an entry right here, okay?
Hmm.
Price taps into this. What are you gonna do? That's my question to you.
Well, okay, the greedy part of me probably would have been like, oh, let me see if it will continue to buy. The
Wrong.
responsible part of me, well, actually, I wouldn't even honestly, I wouldn't take unless I see some kind of change of character, right? Because Sunday usually will, it's gonna show its hand, right? So Sunday at open, I know for an indice, it's gonna show me like what price is about to do. So
Okay, but that's not
it
answering
could,
my question though.
but I wouldn't necessarily take anything right there.
And that's
I'm
what
just
the
being
problem
honest.
is.
Okay.
See, okay, you need to start learning how to pay yourself. This is the downfall of a lot of traders, that they don't pay themselves once it hits a point of interest. I know people, once it hits their TP1, they're out of the trade, they're done for the day. Because if you take a ruler, a measuring from here to here, how many pips is that? Can you calculate that for me?
Mm-hmm.
What
Like
do you want more
15
than
or 20.
that? That's 144 pips. You're done for the day. You see what I'm saying?
Yes.
You need to understand. you guys who are trading right now, who are still here, are amongst the 1 or 2% of the population of the world. There's a lot of people who don't understand what we understand. But there are a lot of people who understand what we understand, but don't know how to sustain.
You should go in a mental asylum. This match should go in a mental
Does that make
asylum.
sense?
Yes,
Naima.
Yes, I
So
understand your point.
that's 144 pips. There are a lot of people, there are people that I know who are in hedge funds who don't trade 144 pips. They take 30 pips and they're done for the day.
No, that's kind of funny. That's no, I'm the bully. But really,
So 144 pips in a day, that's golden.
I base
Just imagine 144 pips times $20. How much is that? Let's get a calculator out for that. 144
That's $2,888.
times 30. How much is that? $86,400 in a month. What are you going to do with that money? I'll tell you, give me 10,000 of that, so I don't need to trade anymore. You see where I'm going with this? But people don't see that. And it's only natural. We are human beings, but this is why majority of the calls that I have, I like to focus on risk management and take profits because that's what sustains you in the game. And this is my question that I asked you is, once you reach here, if you are in a 2 lot size, take 1.5 out of this and leave the 0.5 running to go up. If it doesn't matter. You've paid yourself.
so he's too mad. That was
There's always going to be tomorrow where price is going to give you structure to break and then continue again.
Bro be walking like that.
And this goes back to why I'm saying this is your playing field. You don't need to worry about all this right now. You worry about it once price breaks, gives you a change of character to continue. Then you look for another trade. Because I can guarantee you, price ain't going to reach here today. That's for sure. Maybe not even tomorrow or the day after, unless it's news. All we know is price could come back all the way down. So if you have a bias that is stuck in your head that price is going to go up here, what if you get a false breakout reversal and your bias is still stuck on that price is going to go higher?
Well, see, that's what I'm saying. So maybe I should have explained it a little bit. I get the point. I get the point of what you're saying, and that is something that I've talked to Todd about, just taking the money, right? That is, I'm not, that's not, I understand that point. The reason why I have the previous day highs and the lows and the IRLs and all that stuff marked is because, okay, yes, price could buy into that, right? But because price ended there, right, I would have to be watching the charts and I'd have to be looking for an entry, right? I'm not just going to look at the 4-hour candle. I'm going to look for an entry in order to get to the previous day high. I was going to decide how I was going to play the market once it got to the previous day high. Is it going to give me a rejection? Is it going to give me a change of character, right? And then I would decide, all right, is it going for the stop hunts, right? And is it going to reverse, right? Or is it going to, so that's why I have it marked, right? Because for me, I've in the past just have taken too many trades, right? Because I'm always looking on like lower time frames. So me marking out my previous day high and lows, then unless I see, an order block or something below the previous day high or low, or, if I see structure within it, then, like, for example, if for some reason, if price did not tap this area, right? But it was between the high and the low, then I would be looking to take an entry here. Say that price just didn't tap this area, right? That would be my AOI to come and see price fill this imbalance, and I would be looking to buy up into this area. But because price came and filled this imbalance already, right? Price could come. I don't know. I have to let the market come to me, right? So price could come back and it could buy off of here, right? It could come here. It could give me a change of character. It could, it could come and grab this liquidity here from Friday's high. I'm not sure what it will do, but these are just the areas that I have marked. And from these areas, then I'm looking for price to give me an entry. Does that make sense?
Yep, makes
But
perfect
I
sense.
totally understand what you're saying about having these areas. It's just, US 30 has just a lot of volume, and it is possible that price could come and grab this depending
Oh,
on what's
100%.
going on. We have, news. I did look at that. There's news, you have the PPI and the CPI next week. So that's one of the reasons why I have these marked. It doesn't necessarily mean I'm going to take an entry here, but these are just
Okay, my question to
reversal
you,
points.
since you mentioned that,
Mm-hmm.
if you had a move that did this, and then this,
Like Black Goku.
and then came back down here,
It's Black Goku. It's a monkey.
and then we got news around this time, do you think price is going to tap into this?
You die first and then I'll kill him.
No, that's kind of far away. I would be looking if price came up here and then broke here, either it's going to reverse off of the IRL, the internal range liquidity, or it's going to come to the previous day low. So once it comes to the previous day low, then I'll decide what will happen. But if I've already bought, then I need to close at this IRL up here.
5 inches behind me, so you can.
Okay.
Does that make sense? I hope I'm explaining it
Yeah,
right.
it makes
If I
sense.
was to buy here, right? And so I'll just use this.
Oh shoot, I found him.
Andrew got me using this magnet. Okay. If I was to buy here, right? Say price did do that. Say it retraced into this area. Maybe price will do that. And it buys up here. It goes to here, to this internal range liquidity, right? Then the safe thing for me to do would be to TP here, or look to see how price responds here, and I'd probably take it up here. But if price rejects this IRL here, and you're saying it breaks this or it reaches this, I'm looking to see how price is going to respond here. Or if it breaks this, then I'm looking to see how price responds here. But the point of the matter is that at some point I just have to take the money. So I get what you're saying. And
Good.
Todd,
I was waiting for you to say that. That's all.
Yeah,
That
I
is
have to
all
just
that I was waiting for
take
you
the
to
money.
say. Yeah. All right. You just let me, guys, grab a pen and paper. This is something I want you
So
all to write
is
down.
I'm sorry. So are you guys, anybody have any thoughts about my markup? I just want to make
No,
sure.
you
Did
good.
anybody
Your
see anything
markup was
else?
good.
Oh, okay, well, can I just show you because I did all three, because I saw a divergence, which is crack in, I don't know. Can I go into that, Todd, or you don't want me to?
I think it's a bit too advanced for everyone right here since we're talking about structure right now.
Oh, okay.
Right
Well,
now.
if you have time to, I wanted you to look at my US 100 markup too. It's not as clear, but I just had some areas. But it doesn't have to be now. Maybe I could just send it to you, but yeah.
All right. Well, we can do that right after because this is something I feel like everyone is going to benefit from in terms of
Mm-hmm.
looking for structure. So, guys, just 15 minutes of your time and then I'm done for the night. So, Naima, can I just share my screen real quick?
Yes, thank you so much for your feedback. Appreciate it.
Okay, guys, I want your attention with this right now. This is very important. I want to show you guys how to mark up the chart in terms of support and resistance or points of interest. Okay. You can do this at whatever time frame that you want. 1 second. 2 minutes, guys. 2 minutes. I'll be right back.
Hey, Todd, I sent you a message. I don't even know, Todd. Oh,
Okay. I'm back, guys. So you want to start this off. Please take a pen and paper and write this down. You want to start this off by going into the 4 hour. Okay. What you're going to do is you want to look for the swing structure first. So in this sense, we're looking at that high and that low. As a matter of fact, let's just do this right here. Okay. You're going to take your box, whatever you want to do, highlight the wicks. Okay. You're going to swing down to this 2 hour and then refine these zones. And at the same time, you want to look for established supports and resistance. Okay, so over here we can see we've had some sort of resistance. I'm going to mark it. Is there anything else? No. Go to the 1 hour. Refine. That looks good, so we can keep it there. Anything else? We've got that right there, but that is very close to each other. Then you're going to go to the 30-minute. On the 30-minute, you're going to look for other levels. So I can see there's a point of interest right here because we've had 1, 2, 3 pushes and then price dropped. Take a box. And that's it. So, any questions here, guys, before I continue? Hello? Anyone?
No, I'm good.
No question.
Regia? Al Dijano? Delaney? Davida?
I'm good. Go ahead. I've seen it a few times. That's why I'm
Oh, yeah,
everybody
you
else.
have.
Yeah.
I'm good, Nawaf.
Okay. So, these are the points of interest that you want to be looking for trades off on. Okay? Remember, we've all said this. Two things can happen, or three things. It'll break, retest, continue. Okay? Same thing here, continue. Or move sideways. And then decide what it wants to do. So, all you need to do is wait for a closure. If you're a person that trades on the 30-minute, you're going to wait for a closure, body closure above this zone. Then a pullback. Pullback can be as low as this, maybe below the zone, but comes back out. If you can train your eyes to see these levels and mark them up from the 4-hour going down to the 30-minute, as you can see, I am only looking for a trade within my swing high and my swing low. If price breaks below this, the next point of interest for me is here. Till then, I'm not worried if price is going to come down there. No. In order for price to come down here, I need to wait for a closure below this. Not inside the zone, not outside. No, I need price to close below my zone. So, a good example of this is right here. This is a point of interest for me. That's another point of interest for me. And that's a point of interest for me. So you see, as price broke above it, we retested. Then we got a closure. And then see what happens. Go over this again. So that's my swing low. That's my swing high. Okay? Now I'm doing this on the 30-minute because I know what it looks like on the higher time frame. Okay? Right there. And we got that. And then we did a pullback, but we failed to break low. So this is my point of interest right here. So look, as price pulled back, broke out, we got a pullback. Look where price rejects off on. Now you're going to ask me, how do I know when to take profit? This is going to be a TP1. This is going to be a TP2. Now look, as price gets a rejection, what do we see? Price breaks, gets a pullback, and where does it come back to? Right there. You see, price never closed below the zone. I don't know if you guys recalled earlier when I said price moves in boxes. This is what I mean. Price moves in boxes. It's just a matter of understanding structure. And you can even do this on a higher time frame. If you're a person who trades on a higher time frame, right here, Look, that's your swing low. That's your swing high. Then you look for a point of interest in which you see a lot of rejection. You got that. You see? Look what happens once price breaks above. Look what happens. Same thing here. Point of interest. It's all about establishing your primary high and low. Then you wait for price to break it. So look. This was the perfect one. You got the break of structure, and then price just goes away. You don't get a pullback. This is considered your pullback, as Todd said. Same thing here. Look. Established low. Established high. Look what happened when price broke above. You can wait for the pullback to retest, and then you catch the continuation. Is this clear, everyone?
Clear as mud.
And it's literally just looking for these structures. Look at the wicks. See how price comes back to it. So your next point of interest between where price is and if price is going to go lower is if price breaks below this. And that is all, guys. So you either can wait for price. So now we're on the daily. What I'm going to do is mark the low. Go down to the 4-hour. I want to see what structure is looking like. There it is. I can refine this down to this right here. That can be refined to this high right here. Or you can put that wick because that's where it rejected. Then you go to the 2-hour. You look for anything that looks out of place, refine it. That looks good. We can put this to the recent low right there. Go down to the 1-hour. That looks good right there. That's fine right here. This one's good right there. On the 1-hour, we have this point of interest right here because we got one tap, 2, 3, 4, 5 within this area. So for me, this is the point of interest right here. You see, price never closed below that zone. So now that you have this, simple, right? Continue. In order for price to go higher, it needs to break above this big ass blue zone right here.
That nigga's probably like so. You know what I'm saying? That nigga's probably, you know how my brother is. So what?
In order for it to continue, it needs to do this. Every single time that it breaks, it needs to retest. The market works in a box. You just need to see that, but first, structure, structure, structure. So if I am going to be playing in a zone, this is my playing field. This and that. And I have this right here and that high right there. So what does this tell me? Up there, if it breaks, goes down there. And I can do this. Is that clear, guys?
Yep. And no question. When you talking about false breakouts
So false
situation.
breakout only happens when price breaks above or below the previous week only. That's how I see it. Because I trade on the 30-minute. What I mean by that is this. What's burning? Hold on, give me a second, guys. I'm back. Sorry about that, guys. So I will look for okay. Let's do it this way. Okay. Let's say this is Friday, Monday, Tuesday, Wednesday, Thursday. Who was it that asked me about the false breakout?
That was Delaney.
Okay. So let's say price did this. Okay. Let's say from Thursday, let's say this was Thursday right here. Okay. We created a high, the market closed. And then come Monday, or not even Monday, let's use Tuesday. And then Tuesday came in, we broke above, and then we closed below. This to me is a false breakout. A majority of the time when this happens, you'll have 2 days of sells or 2 days of buys, maybe even more. But it's only the previous week's high or low. Why am I saying that? Is because I've seen that happen majority of the time doing that. Okay, so let's see. That's Monday. Nope, that's not going to work. And the breakout has to happen. The breakout and the reversal needs to happen on the same day. Does that make sense?
Yeah, you know what? Oh, sorry. I have a question.
Just
So,
hold your thought. Just please bear with me 1 second.
my apologies.
Okay, this is a very good example. So this is Monday. Does it close above? No, it doesn't. I'm looking for a good one. Oh, you guys have a Sunday. Why is there a Sunday here? Hold on. I'm not in my time zone.
Dad, turn on the AC.
Say what?
Turn on the AC, please.
Okay. I'm trying to look for a good one for you guys. Give me a second. Give me a second. Tuesday. Nope. This is not a good one. Naima, you can ask while I'm trying to search for one.
Okay, so you mentioned that a false breakout, right,
You're
only
gonna have to
happened
speak a bit louder,
on.
Naima. Sorry, I
Oh,
can't hear you.
I'm
Yeah,
sorry. Can you hear me
you
now?
can. Yeah.
All right, so you mentioned that a false breakout, right, which I'm assuming you're talking about the rejection off of like the previous week's high, right?
Yes.
Are you saying that that only happens? Are you just saying that just for gold, right? Is that the
No,
characteristic
that's
of
for
just
everything. Every pair. As a matter of fact, let's look at another pair, GBP USD.
I'm only asking because I've seen a change of character after price reaches the daily low or the weekly high, right? I've seen it on US 30, but that's why I was just asking if that was just a trait of gold or maybe pairs.
Okay, look at this one
Because
here. This is a perfect one. So you see how this was Thursday and the previous week's high was Monday?
Mm-hmm.
You see how price closed above on Thursday and then closed back below?
Yes.
And then drops. So I'm expecting come market open, we're going to get at least one more drop. The market does this over and over again, but it has to be the previous week, not the week before. No, it has to be the previous week where you see price do a false breakout and then breaks back in. And it has to close below the previous week's high. Like that day needs to close. Find another one. Yep, look at this one. This is a perfect one. Look. No, that closed on Monday. So this is wrong. Wednesday. Nope. So this will happen every once in a while. No, that closed above. But when you get it, it's usually at the tippy top of structure. All right, buddy, give me a second. Yeah, here's another one. This is a perfect one. So that's Monday. Tuesday, Wednesday, created the low of that week. You see?
Yes.
And then what happened on Friday of the following week? We broke below and then we closed above. And look what you catch. So the market does this day in and day out. You just need to be very tentative of what you're looking for. Look here. Now I'm starting to see it more now. That is the previous week's high. Monday closed above and then closed below. Then price fluctuated amongst it and then dropped. So, which brings me to another thing, guys, I want you to understand is the market has 2 cycles. Cycle 1 is Monday, Tuesday, Wednesday. Cycle 2 is Wednesday, Thursday, Friday. Okay?
Mm-hmm.
Monday or Tuesday is going to form the high or the low of the week. Wednesday or Thursday is where you're going to find a reversal. So, Monday, high of the week. Thursday, reversal. Tuesday, low of the week. Continuation. Look here. Monday, low of the week. Wednesday, reversal. Tuesday, high of the week. Wednesday, reversal. I kid you not, guys. Monday, low of the week. And high of the week. Wednesday, Monday, high of the week. Wednesday, and then Thursday, reversal. You see this, guys? Monday, low of the week. Wednesday, reversal. Double reversal on the Thursday. Yep. Monday, low of the week. Tuesday, we got a reversal. Thursday, another reversal. Tuesday, low of the week. Thursday, reversal, continuation. So keep that in mind, guys. It's very important. And majority of the time when you find these reversals, it will hit a point of interest. All right, I am done. For those who want to know more about structure, feel free to contact us, guys, like me, Todd, Andrew, Kim. Don't be shy about it. Contact us. Let us know that you want to go over structure. Don't just keep quiet and make this. Do some homework for the night. Do this, at least for 30 minutes. Look at structure. You see what I'm saying? Even though, even start off like this. Don't have to be right. You can do this. And keep it that way. Because for us, we will know what you're missing and what we can tune that to see, make you look at the charts differently in terms of swing structure. But we cannot help you if you're not doing this. We can't. You need to do your part of the learning process. And remember, don't get frustrated. This is part of the learning curve. Try to enjoy it rather than get annoyed by it. Because once you start understanding and seeing the structure, guys, a lot of aha moments are going to come. And then whatever indicator that you put on the chart, then you'll understand, now I see why it's rejecting the 78 or the 68.1 on the fib. Because you are able to see what structure is doing. Like, I know for a fact a lot of y'all are putting that fib on, but you don't understand why price needs to come back to those zones. Once you understand structure, you'll see why. And you'll add more confidence when you enter your trades. Because I know a lot of y'all, whenever you put that fib, you're still thinking, what if it goes higher? And it's normal. There's nothing wrong with that. All right. I'm done. But guys, like I said, please make sure that you reach out to us.
Thanks.
Thank you.
What?
Appreciate you all.
Oh, anytime, guys. Anytime.
And thank you. And we can find this video inside Discord, right? So we can replay and study.
You say you can do what with the video?
We can find this video for replay in Discord.
Definitely. It'll be in recorded Zoom calls once it downloads.
Oh, okay. Thank you.
No problem.
Marcia, scheme through the videos.
Yes.
But make sure you come back to us. If there's something that you're interested in understanding, don't just watch the video and go about yourself trying to understand it. No. That's why you're in this group. Reach out. Whether it's me, Todd, or Andrew, or Kim, reach out to us.
Hey, and one more thing, guys, for the benefit of saving you time and a lot of headaches. If you can relate to the way that Nuoff teaches it, you need to reach out to Nuoff. Even though we say the same things, me and Andrew are not going to teach you the way Nuoff teaches you.
That's true.
Me and Kim are not going to teach you the way Nuoff teaches you. So if you can relate, and it's easy to understand when Nuoff explains it, you need to get with Nuoff and get with Nuoff on a one-on-one basis so he can explain it to you and you can get it. I can assure you that we trade very similar styles, but the explanation is totally different. There's nothing wrong with that as long as you understand what you're looking for, what you want to see out of the market, what your keys are, how you get your point of interest. You got to understand all that stuff, but you need to have the same person pitch it to you every time. That way you can digest the information and it can make sense to you. If you start learning from me and you switch to Nuoff, it's going to feel like you're going back to the beginning.
Yep.
Same with Andrew.
100%.
You know, and look, if we're explaining something to you and you don't understand, you can't be afraid to say, hey, stop. Hey, slow down. You know, kind of the way Shay does all the time. You know, hey, that's not what I mean, or that's not the way I understand it. Because if you let us continue and you miss the first piece, it might confuse you further.
So just to let you guys all on a little thing, me, Andrew, Todd, we wish Kim was there, but I guess she got some things to do. But we want a lot of things to change in this Discord for the better. And it all involves you guys. You guys are the people that need to make the effort to come and ask questions. We no longer want to see a Zoom call where it's just silent. No, you're not learning that. To us as people who are trying to teach you, we feel like you're just going to take that information and put it on the shelf. No, ask the questions. There's no such thing as a stupid question. Even though it's something to do with something we have said a million times, just ask it again. There's nothing wrong with it. But please make sure that you're interactive in these sessions. Otherwise, for us, it's just, I'm sorry to use the word, but for me, I talk for me. If I have a session where there's no one interacting, that's a waste of time. It's a waste of time.
Yeah, it's definitely a waste of time. And I guess the caveat of what Nuoff just said, if I mark my charts and nobody else has markings on that charts, that's a waste of your time. It's not a waste of my time because my alerts are going to go off during the week off of a trade that I found because you asked me about that pair. Most of the time, y'all ask me about a pair. Hey, can you look at this pair? I'll look at it. I'll have the markings on my chart, but you won't have the markings on your chart because you're not sharing your chart. So That's why I've pretty much stopped doing markings on my chart. If you ask about a pair, I want to see it on your chart. And that has great benefit, once the week starts. And if you guys learn to start taking trades from your point of interest, you're going to be a lot more successful. You make your markings and you wait for price to hit your point of interest. Your alert should go off. Then you understand how you should proceed from that point.
If you get stopped out, save that screenshot, share it, because that's where you're going to learn what went wrong, what you should have done, or should have you wait for a breaker structure, look for something else. And that you're only going to understand if you can refer back to us. Don't delete those stopped out trades. Those are the perfect tool for learning how to better your entries. Please do not delete them. Screenshot it, the time, the date, the way you entered, and just send it through, or we can talk about it in these sessions. This is where everyone will learn.
I know I'm just definitely grateful for, these meetings and, an opportunity to share with you guys and get sharper. So I'm thankful. I mean, I'm sure everybody else is, but I'm thankful that I can just share my chart and just grow. And, just listening to everybody and just, things that resonate with me, like, take notes, and then things that maybe I just didn't see before, being able to add that to my tool belt. So I'm very, very grateful. People spend thousands and thousands of dollars for stuff like this. And sometimes the value, I've seen groups where people spend like $3,000 just to learn how to use a fib, and they're not even using it correctly, So I'm grateful for this. I just want to say thank you to everybody.
Welcome.
So tomorrow is for the beginners, is that correct?
Is that with Kimmy?
Yeah, that's correct.
Okay, just want to make sure. Okay, thank you.
Yeah, I'll be in there with a Nua.
Yeah, my
Oh,
ass gonna be
perfect.
asleep, man. So we all do shit too early in the morning for me, man.
Hey Todd,
Yes, ma'am.
I saw you and Kim talking about the dollar the other day. I wasn't able to comment on it.
Talking
But
about the what?
is it possible we can look at the dollar before we get off?
Talk about the what? The dollar?
Yeah, I was looking for a retracement, like a sell back to keep
Share
buying
your
on
screen.
UJ.
Share your screen.
Okay.
Yeah, share your
Okay, I'm gonna
screen,
share my
Kai.
screen right here. All right.
Is Ayana on the call too?
Ayana, no, I think she's at work. She in Georgia. It's my Georgia baby.
Okay.
And she'll be on tomorrow.
Okay.
Okay. Let's see what's up here. Uh-oh. Am I sharing?
You were.
Can you guys see?
No.
Nope.
You were. You took it off.
Oh, wait, let me try that one more time. They can hear you. Okay. Okay. Can you guys see it?
Yep.
I'm not sure why it looks like that. Okay, that's better. That's out the way. So this is what I have for UJ. I know, Todd, you said about the dollar is buying.
For
Kim said
EJ?
it's selling. For UJ.
You on EJ?
I'm on EJ?
You're on EJ,
Oh,
yeah.
wait, y'all must be on a different, it's gotta be on a different screen then. Hold on one second. That must have been the wrong. Sorry.
What kind of setup you got?
Because I was surely on UJ. Like,
It said EJ.
what in the world? God, let's see if this one works. Okay, do y'all see UJ now?
Yeah, I think that's you, Jay.
Okay. I had UJ pulling back like to sell down just to buy it. And I know that this is what I was looking for. I was looking for a to sell down this week to see the buy-in, but I just want to know y'all thoughts on it because y'all both had different thoughts on whether the dollar was buying or selling.
Well, listen, okay, this is what I would like to do, and I'm glad you. What time frame is this?
It's a daily.
Okay, I think this is a high enough time frame. Where is your structure? Your swing structure?
Let me draw it on. I don't have a mouse pad, y'all. I'm sorry. I got my mouse on my leg right now. It's this way on the daily.
So from that swing point, price pulled back.
Yeah.
And then it sold down. Did it break it low?
No.
So
it wicked it right here.
But that's not the low. Your swing low is down there at the bottom.
Oh, right here, yeah.
So price is playing between two swing points. If it did not break that low, I would have expected price to pull back like you did and sell it down to break the low. If it doesn't break the low, then it has to either go back up and break the high, or it's going to bounce off of one of those highs. So there are intermediate highs in between your swing high and where price is now. Do you see the intermediate highs?
Yeah.
Where are they?
The intermediate highs right here.
Look where price is.
Oh, right here. Internal highs, right? The internal highs.
But you're looking at this left over here. I'm looking at prices up here already, right? Ain't this where price is?
Yeah, yeah.
Okay, so what high is above that price? You got that high
right here.
You got these highs up here, and then you have this high, this high up here, and then you got your swing high. So if it's me, I'm trading, as long as we're breaking highs, I want the pullback. I want to look for it to run this first high and then run to or at this high to see what's going to happen. If it breaks this high, I want it to break, pull back, go to the next high. Does that make sense?
Yeah, it did. Yeah, I was looking at the buy because of this here. It didn't, when it broke here, it came back and it just wicked under here.
This right here, Kai, right there, that move right there is it's still a pullback. I know you got you got substructure within that pullback, but from the time it hit your swing low, it just pulled back and it hit your zone perfectly. It just did not keep selling to break that low. So because it didn't sell to break the low, you're fine to trade it from this low and this high. That's where that trade is at. So I'm not taking any trade unless it pulls back to discount, right? You see this low and this high? So I need price to pull into discount before I trade it to that high. Or I need price to trade to premium before I sell it to this low.
Gotcha. Yep. That's what I was looking at.
Yeah. So I'm like you. I expect the dollar to buy, so I'm gonna see it pull back. And I can get in that trade and I can take it to this high, and I gotta see what happens at that high.
Yeah, I didn't take this trade when it happened because I was already done with my trade for the week, so I didn't take it. But I was supposed to enter here after this break and pull back. I missed it.
Yeah, I mean it happens. And there's nothing wrong with missing out on some trades. But do you look at the Dixie? Pull up the Dixie.
I don't even know if I have the market.
Okay, you see how you see the Dixie, how it had these lows right here, and then you get that wick down. That happens daily, right?
Yeah.
So once I got that daily stop run, that push down, then I was in buys for the dollar. That's why I sold GU.
Okay. Thank you. I'll let somebody else share.
All right. Any other questions?
Okay, what's it from me? Thank you, Todd.
You're welcome. Everybody's cool. Does everybody understand what they're trading next week? Have y'all looked at y'all's charts?
Yeah, I got it.
Yes, I understand.
All righty. If